Welcome back, everyone. This is the second lesson of my trading concepts course of what I know and trying to teach them to you guys to help better my understanding, because if you want to fully understand something, you got to be able to teach it. Let's go. You guys probably watched the last video about highs and lows and break of structure. Today, what we're going to be learning about is fair value, spell it out for you guys. Fair value gaps, IFVGs, and inverse fair value gaps, IFVG. We're going to be learning fair value gaps and inverse fair value gaps. You guys, if you watch my trade recaps, have heard me talk about these a lot. These are basically the foundation of my trades, basically. Oh, I could also, I just thought another one. Equilibrium. Should I do that now? Equilibrium. No, I'll do that next. Because, yeah, fair value gaps can kind of pair up with that. But you guys hear me say this a lot, fair value gaps, in my videos. We'll go up here where there's nothing. But you're probably wondering, like, looking at the chart, what is this guy even saying? Like, what is a fair value gap? Where is he seeing this? Well, if we draw this out, imagine this, my face camera might be in the way there. If we imagine this is a candle, you know what? I'm not drawing it, bro. We're getting the box out. Perfect. You imagine this is a candle, and it has little wicks like that. Whatever. Perfect. And then we have another candle, and it has its own set of wicks, like this, like that. And these videos are going to be probably a bit unedited as well, going full TJR scammer style. Nah, hopefully TJR is not a scammer. Then we have a third candle like that, with wick like this, wick like that. So that's 3 candles. A fair value gap is a 3 candlestick pattern. If you guys watch any other video, they're all going to tell you that. What it means is a fair value gap needs 3 candles to exist at all. It needs candle 1, 2, and 3. Pretty simple, right? Now, where is the fair value gap in this price action? The gap is right here. We see this wick. This is where this candle went before closing here. So yeah, the candle, it started right here, moved all the way down like a snail. It left a little trail right there. That's the snail trail. It went up, all the way up here, and then it came back down, left a little snail trail, and closed right there. And now this is the body of the candle, which is the blue. The little snail trails is the wicks. That's where price action went. So the gap is where price action didn't go on this candle, and it didn't go on the third candle. Oh wait, what is it? Yo, I can make a square. I'll hold down shift. Yo, who knew that, bro? And then there's a gap because this candle just blew right past this price action. And it's basically where orders aren't filled, I think. It's like a void of where orders haven't been. So no one was really buying or selling in here because we didn't really get any. The wick of here, this is buyers pushing it up, all the way up, but then the sellers came in and pushed it back down to then this close at that area there. And same thing here, the sellers came in a little bit, but then the buyers pushed it back up. So there was no sellers able to enter in this area here. It was just buyers pushing them past. And this gap is likely to then get respected, because if there was no sellers in that area, that means when a candle wicks into it like that, we see candle wick. When it comes into this gap, it doesn't have to wick, it just has to come into it. This was where no sellers could enter before, because the buyers were just taking over, and they left them in the dust, and that dust is the gap. And then when they come back into that gap, it's likely to then get more sellers in, more buyers in, because I don't really know. It's like a void of orders. I remember TJR explaining this. This is good because I know it's like respected, but I don't really fully understand it. So teaching it to you guys is gonna help me. And then it gets respected like that. Bang. Here's a little wick. It's likely to. So, and this is the exact same for the downside. You know, we get that 3 candlestick pattern, whatever, to the downside, and that's the gap, come in, go down. I'm not gonna draw it all again. But we had no sellers here before, so when sellers are able to enter, they come in, and then it just gets overrun by buy orders, because it's just a liquidity void of where the buy orders ghosts are all there, and then they just bloody punch up the sellers and then push price higher. It's probably the best way to explain it. You guys can, I don't know, look into that a bit more. But yeah, it's basically like a void of where liquidity was. And we can see this on the charts a lot. Now, but we'll come back to that example. So we see this. We see, boom, fair value gap. Price comes in. We form this 3 candlestick pattern. Buyers, this is on the downside. So there's sellers taking over here. Buyers come in. They come into this area. Sellers take over again. This is their territory, and then it goes back down. And oh no, I'll find an example of that. Yeah, we see this, boom, fair value gap, get filled. This is where the buy orders were, and we can see it doesn't matter if it's like 3 up candles or 2 down candles and an up candle. You see, this is 1 up candle, 2 up candles, a down candle. Still, there's a gap there. Sellers come into it, the buyers take over, and it gets respected. And we can see this pairing up with our break of structure right here: up candle, down candle, break in structure. So we know price has changed direction. we see price form a fair value gap, and then the fair value gap gets respected, and bang, it goes up. This is on the 1 hour. Let's go on the 5 minute. This is on every time frame. Boom, fair value gap, up candles out of it. Boom, fair value gap, up candles out. Not every fair value gap is going to get respected as well. Like, we see this fair value gap gets respected, but barely, and then it comes back down. And yeah, we also see all these fair value gaps wherever in there just get fully demolished. And then another thing that you guys need to keep in mind is that the more times, if you guys think about a girl, the more times she gets tapped by different guys, the less truthful she is. The more times your fair value gap has gotten tapped, the less likely it's going to be respected. We see this, comes in once, comes in twice, comes in 3 times, comes in 4 times, bang, and then we come in again and again. It got respected, but it's because it's such a big fair value gap that there's, even though we've tapped it multiple times, if we go down there, all of this space still hasn't been tapped. But you guys get what I mean, like this area is now gonna be less likely respected. Let's see if we can find a better example where it doesn't get respected. This is a good one. Boom, we're in an uptrend, we see down moves. This fair value gap gets tapped and respected once. Or, yeah, it gets like respected, we see up candle. We haven't broke structure to the downside yet either. Come in a bit more, up moves, come in a bit more, fill it up. And that's like the 3rd time it's been filled, bro. And then it goes down. And you know that a fair value gap has been disrespected when we close below it. So this is where inverse fair value gaps come in. And this can be also used as a change in trend, like a break of structure. So an inverse fair value gap is going to be when a fair value gap gets closed, just like a break of structure, it needs to fully close and disrespect it. It can't just be a wick into it, because that is still possible respection. You see that wick there? But we see the candle close below this fair value gap, making it an inverse fair value gap. And then this can be used as a change in trend as well, like a break of structure. Because where the buy orders were, this void, the ghosts of the buy orders, they tried to fight back here, but then the sellers just came in and just like round 2, Mike Tyson just knocked him out. Frick, bro, my camera's about to die. Gotta make this quick. They knocked him out, and then they're going where they want. Now we can zoom in, even on the 1 minute, and find some examples. Let's see. We see inverse fair value gaps. Boom, we inverse all these fair value gaps. And to make a valid inverse fair value gap for a change of trend, it can't just be inversed this one down here, because there's one right above it. Price could have just been coming up, inverse that one, but wanted to just go up here and then go down. But we see it inverse all of them, and we go up. And then we see it, yeah, like here. Even though it inversed this gap, the gap below it is still a valid fair value gap. Oh my days, box. It got inversed, But this one below was still valid until this second candle here closed below it, and then we see a change in trend. Now that I usually use on like the 1 minute, or if a 5 minute high is way too high to close above for break of structure. But before my camera dies, I'm gonna wrap up this video. That was fair value gaps and inverse fair value gaps explained. Hopefully that taught you guys something. And yeah, hopefully, I'll just make this big for the thumbnail or what, brah. Hopefully you guys learned something from that, and yeah, go watch my trade recaps and see how I'm using that in the markets to make money or lose money. Learn lessons. And yeah, last thing I want to just tell you guys is I legit a couple weeks ago just lost a trade on inverse fair value gaps because there was one, I thought there was one and then there was one above it, and I thought that if inverse the first one, it would have got respected. But that's how I learned that lesson, that it needs to inverse all of them. Even if there's one here and there's one right above it, it needs to inverse both of them for it to be a change of trend if we haven't broke structure. That's it. Catch you guys in the next one. Subscribe, peace out, see you later.